Hello everyone, Nagraj here. In this video, I would like to talk about different types of home loan products that you can choose from when you're applying for a home loan. This will help you to make an informed decision when it is time to secure financing for your dream home. So let's go. There are two types of home loan products based on whether you want to pay principal plus interest or interest only. Each of these loan structures has its own benefits and considerations. So let's explore the differences between PNI loans and interest only home loans. Principal plus interest home loan. A PNI home loan is the most chosen home loan product. With this type of loan, your monthly repayments are split into two components, the principal and the interest. The principal refers to the actual amount borrowed from the lender, while the interest is the fees charged by the lender for borrowing the money. Over the life of the loan term, your repayments gradually reduce the principal balance while also covering the accrued interest. One of the advantages of PNI loan is that it allows you to build equity in your property over time. As you make regular payments, the principal balance decreases and you gradually own a larger share of the property. PNI loan usually have a set loan term, typically between 15 to 30 years. So by the end of your loan term, you can pay off the home loan completely. Interest only home loan. Interest only home loan allows you to pay just the interest on the borrowed money for a specified period, typically between 1 to 5 years. During this period, you will be paying only the interest portion, so your principal amount remains unchanged by the end of interest only loan period. When you go with interest only loans, your monthly repayments will be low as you will be paying only the interest on the borrowed money. And this is the main reason why few people go with interest only loans. It is important to note that after the interest only period, the loan typically reverts to a PNI structure and the borrower must start paying off both the principal and the interest. This transition often results in higher monthly repayments, so it is important to plan to build up your savings, or you can ask for another 3 or 5 years interest only period. Banks might be willing to offer you another term of interest only loan if you still meet their lending requirements. Banks will usually reassess your financials when you request for another interest only period before they approve your request. Should you choose PNI or interest only loan? In general, when people buy property to live in, they go with PNI loans. Interest only loans are most popular with property investors because our monthly loan repayments will be less and we can use additional cash flow from the investment properties to pay off our non-tax deductible debts like car loans or primary residence home loans. Based on whether you want to go with fixed interest rate or variable interest rate, we have below home loan products. Fixed interest rate home loan, variable interest rate home loan, and split loan. Fixed interest rate. In case of a fixed interest rate home loan, your monthly loan repayments will stay the same for a set period, for example, 1, 2, or 5 years. After the fixed loan period expires, your home loan changes to variable interest rate loan and you can refix the loan again for 1, 2, or 5 years if you want to. Some of the pros of fixed rate home loan are fixing interest rates will help us in budgeting as we know exactly how much we need to pay every month during the fixed interest period. We can fix the interest rates for 1, 2, 3, or 5 years. This product will have fewer loan features, so usually will cost you less compared to variable interest rate home loan product. Some of the cons of fixed rate home loan are you won't get the benefit of interest rates going down. Even when RBI decreases their official cash rate, we will still continue to pay the fixed rate, which might be higher than the variable interest rate. It's usually not easier to switch loans later if you find a better deal somewhere else. Banks will ask us to pay break fee if we close your fixed interest rate home loan. Fixed interest rate home loan products will not have features like offset accounts or redraw facility, so you will have less flexibility in paying off your home loan faster. Variable interest rate. In case of variable interest rate home loan, your monthly loan repayments can go up or down as the lending market changes. Some of the pros of variable rate home loan are when the Reserve Bank of Australia decreases their official cash rate, your bank might reduce your home loan interest rates, so this will reduce your monthly home loan repayments. We can make additional repayments without paying fines. It is usually easier to switch loans if you find a better deal somewhere else. Variable interest rate home loan products will come with features like offset accounts and redraw facilities, so we will have greater flexibility to pay off the home loan faster. Some of the cons of variable rate home loan are: when we go with variable interest rates, banks can increase your interest rates when RBI increases their official cash rate. So your repayments might increase when the official RBI cash rate increases. This makes budgeting harder as your payments could go up or down. This product will have more loan features, so usually it will cost slightly more than the fixed rate home loan product. Split loan. If you are not sure whether a fixed or variable interest rate home loan is right for you, you can consider a bit of both. With a partially fixed rate, that is split loan, a portion of your loan has a fixed rate and the rest has a variable rate. You can decide how you want to split the loan. Say for example, you can split 50% as fixed and 50% as variable, or you can fix 20% as fixed and 80% as variable. It's up to you. Please note, whether you go with principal plus interest home loan or interest only home loans, you will have an option to choose whether you want to pay fixed interest rate, variable interest rate, or split the loan into fixed and variable. Yeah, that's all for this video. See you in next video. Until then, take care and have a nice day.